We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up SWAV. We are on the 12-month time frame. Price action last candle to right hand side is a bullish green candle, spiked down to a low, so it's retesting a second last candle, but within that second last candle as well. Current price is sitting at 286.46. So if price pushes up further, it can tag the top of the price action candle, which would be that wick at 297.64, near the numbers. If the market pushes up further than that, it can head to the second to last candle wick, which would be near the numbers of 322.65. If the price pushes down, it can push down as low as the second last candle, bottom of that body. Why? Because price action is within the second last candle, so it can drop as low as the second last candle body of that wick. And also it can tag the midpoint of that second last candle, so gauge the top to the bottom, add the midpoint right in the middle, so price action can be dropping towards the numbers of 199.11 before heading down to the following levels of the price action body of bottom of that wick, which would be near the numbers of 174.06. And that's also at a midpoint between the range of between the SR lines above the SR line of price and below the SR line of price. So right in the middle, we're going to add an SR line of near the numbers of 249.21. So let's take a look at what's going on in the market. So we have 1, 2, 3, 5 candles in the market, all identifying as bullish green candles, different forms of bullish green candles. So let's read what we see. So we can see the first candle in the market start off with consolidation. Market spiked up to a level, came back to retest with the third to last candle. That third to last candle did have momentum for a push up. So think about it pushing up to a midpoint of that overall structure. So if we created a zone and we put a midpoint between the highest body and the lowest body of those candles, and we create that midpoint, we can see that the market spiked up with the third last candle, came back to retest with the second last candle, pushed back up, closed out in the middle of that midpoint line or zone, and then we received consolidation. Market came back for another retest and pushed back up. So let's read that one more time. So the market's performing consolidation, push up to a high retest, and the market push up. So if this market pushes up further, identify as a push up, a retest. It's like a double bottom in that area. So it's like spiked the area multiple times. So like a double bottom, maybe a triple bottom. It may identify more as we walk down the time frame. But so far, let's say it's a W that performed itself and then pushed up. So we just waiting for it to engulf the second last candle wick to see if it's going to push up, but it's within that, so we are consolidation. So market can be consolidating sideways until that pattern's performed. If the market comes down from this area of price, so that means that price has tagged that high area, which we're going to add a zone. So it spiked it how many times? It spiked it with the second last candle, came back to retest, and price actually tagged it again. So if it pushes down, it'll identify as a first leg, second leg, third leg, and we'll see a fourth leg in that. If it pushes down and engulf the second last candle, it creates an M pattern, and we'll have to figure out what's going to happen next. Working our way down to the 6-month time frame. So price action on the 6-month time frame is reading as a bullish green candle, spike down to a low, second last candle, spike up to the high. So we are still looking for price action to engulf the second last candle. Working our way down to a 3-month time frame. So price action, 3-month time frame, bullish green candle. So price third last candle, fourth last candle has spiked those areas multiple times at that high area. So if we take that area and tag it to a zone in that area, we can see price third, fourth tag those areas multiple times. So if it declines, where's it coming from? So pushing up in green, we do have that first leg, second leg, market consolidated with the second to last candle. So it pushed down with the third last candle, consolidated sideways with the second, came back for a retest with the price action, and now we're waiting to see what's going to happen. So if it declines on this area, it'll drop down, but before it does, it'll identify a pattern on this side here. So we'll see if that market's going to start pushing up into the zone of pushing down, or it may just follow with a bullish green candle. And if it does, we'll talk about that on the monthly time frame. So if it does follow up with a bullish green candle, it'll identify multiple touches to below the midpoint line. So it's like second level lows. So identify as the first, second, third, fourth retest. So the third last candle, so second, third, fourth last candle came back to retest that double bottom that we created on the left hand side, or we found on the left hand side, and then the market pushed up first, second, third, fourth retest, market pushed up. Now if it breaks this resistance of the high red and green, that means market can identify double bottom, retest, push, breakout. Then we're looking for another retest for to see if that market's going to push up further. But whatever's going to happen, the pattern's going to be performed somewhere above the SR line, above that zone area that we created, SR line, below or at the midpoint. It's currently below right now. Working our way to the weekly time frame. So price action weekly time frame, reading as a bullish green candle. So market has spiked that area again. So adding that zone to that area, right hand side, we can see it had multiple touches. That means if it's declined from that area, what it would look like is first, second, third, fourth retest, market drop. So we have a double top and a retest on the left side. Market came back to retest again, so it can drop down from an overall double top retest and a retest. So I would primarily just go with red and green to the high. So it happened first, second, third, fourth. Market came back to retest. If it drops down, that's the overall three pushes to the top, which will be identified as a double top and a retest, or a triple top. Working our way to the daily time frame. So price action daily time frame is reading as a bullish green candle. So what was performed at the top of that zone was what the market broke, came back to retest. So that's identified as the first leg, second leg, third leg, caught some momentum off that break, and we have that double bottom that's created. Okay, so now we're going to see if that market's going to push up further with a bullish green candle into that area, or it's consolidate sideways or drop down. So as we being on the daily time frame, we're going to add our resistance to the high and resistance to the low of the previous candles, which would be the second last candle, which would look like a bullish green doji, more of a press up to the top of that area. And as we walk down the time frame, we can identify what has happened in the market. So we do have our session breaks on. It's the previous day, so we see that it consolidated Sunday, Saturday, Friday, Thursday. We see that consolidation. Market broke out, reading as 9:30 on the 4-hour time frame. And now we have receiving consolidation with price action being a bearish red candle, doji style. So we're going to see if it's going to identify a retest. So it will identify a break, a retest, and push up, or it'll just consolidate below the zone, or it'll just come back down. But you're looking for the engulfment towards the second last candle on the 4-hour time frame. 3-hour time frame, we can see once again price has spiked up at 9:30 a.m. time, it says, and it consolidated with the price in a second. So we looking to see what's happening. There's also a pattern in that area with the price second and third, which is considered a wedge pattern. Connect the resistance of the wicks, bring up the support of the bodies, and we have a wedge pattern. So that's a flag pattern. So it's identified as a first, second, third, fourth. So we can see that flag pattern is a retest. Now it's going to push up, it's going to come down, or it's going to continue to consolidate with those doji styles. Okay, guys, please study and review Forex pattern cheat sheet, breakout and retest strategy. Okay, guys, this is Cam Jones, FX, SWAV, Stalk.